This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com. Welcome. You are listening to the Daily Market Wisdom with Nick Santiago. I'm Kerry Lutz, and today is April 13th, show number 11. Nick, looks like we're hopefully seeing a light at the end of the COVID-19 tunnel. And what's that going to be for the market? What's that going to mean for us at large? And will we ever get back to normal?
Well, those are all three important questions, and I believe yes, yes, and yes. What I'm going to say for the market is that we've had a really good run-up from the recent lows made around the 23rd of March. And if you look at a chart, we've really recovered 50% of the drop that we experienced from February 19th when the S&P 500 was trading right around 3,400. So we went all the way down to 2,200. Now we're sitting just below 2,800. Market is pulling back a bit today. But remember what this week is. This is an options expiration week. So if the markets were up last week, they usually will retreat a little bit. This is kind of the norm, what you're going to get during an options X. But I do see the light at the end of the tunnel, and I've been seeing the light at the end of the tunnel for a while now. And the charts have told me to look for the light. So, here we are, and it looks like, we're getting closer to more therapeutics. We're getting closer to more potential vaccines if they want to go that route. But, we even have chatter now that the economy could start to open up, maybe not 100%, but it could start to open up in the month of May, and that would start to get things back on track.
Yeah, that certainly would go a long ways towards getting things back on track. And you got to believe that that people probably just had about all of this that you can stand, and the office is looking really good. Even if you hated your job, spending a month and a half at home, all of a sudden that job is looking pretty good, isn't it?
I think people are itchy to get out, and they are now going to be, I think, more grateful for what they really had. And sometimes you have to lose something to realize what you had.
Yeah, yep, really, I totally agree with that. So we look, looks like we're losing close to 10 million barrels a day of oil production as OPEC and the Soviets, the Russians, Putin, have agreed to scale back production greater than ever. We'll see how long that lasts.
Yeah, well, we got an OPEC production cut, but it's not really OPEC itself. It's OPEC plus, right? So it's going to be including Russia. It's going to include Mexico. It's going to include even the U.S., I believe. So we're going to have a 9.7 million barrel a day cut. And now I think traders can watch for a pattern develop in oil. And we talked a little bit about this last week on the program. And now it's just about watching for that pattern to form. And it looks like it's shaping out. So it's not a buy just yet, but I think it's starting to give us that formation on the charts that it can go higher.
And if it's going to go higher, what's the best way to play it? The ETF, the oil ETF, or options?
Yeah, I think both ways could be done. Today I already picked up a call option on an energy stock already today, and I will be looking to get into crude oil itself via one of the ETFs, either the USO or the UCO, which is a 2-time oil ETF. I'm not sure, but as soon as I see that pattern form, I will be jumping on both of those, one of those two equities.
Wow. All right. Well, who would have thunk it? We were down to the 20s. Where's oil trading at right now, Nick?
Well, currently we have crude at $23.14. It's up about 38 cents on the session right now. But I like the way they're defending it so far. It was a sell the news event, obviously, on Friday. But the way the pattern is shaping out, it looks like oil could be setting up by the end of the week.
Wow. And by the end of the week. And you mentioned, getting a little ahead here, Friday is options expiry, as they would call it in Canada.
It's options expiration.
Yes.
options expiration on Friday for the month of April. So whenever we get that, I think markets should expect a lot of institutional game playing this week. So you'll see stocks that were very, very popular and going higher. They usually are due for a pullback. Stocks that are beaten into the ground, they're usually due for a kind of a bounce. It really depends where the small retail options trader is positioned and where they sit as far as this Friday's expiration date goes. So meaning if they own an option that is going to expire this Friday and they're in the money, the institutions usually want to take them out of the money. And if they're looking at an equity that has been beaten down and everybody owns puts on it, usually the institutions will pop it up because they want those retail options traders to expire worthless as well. So it's a lot of game playing going on in the near-term expiration. That's why I always tell traders, don't trade the near-term expiration. Give yourself some time on the clock. It's a fool's game to try to play the April expiration at this point.
Hey, what's your view of weekly options? Do you ever play them?
I don't. I don't play them. I have not played them. I know a lot of traders like them, but in my opinion, they're really just short-term trading vehicles. You could use them if you want to day trade options, but I would not use them to try to swing trade an option for a couple of days. It's just you just don't have enough time on the clock there, and that's too easily manipulated, in my opinion.
Uh-huh. So, interesting perspective on things. When you're buying options, I was going to ask you about this last week. How do you figure out if you're paying too much for an option? I know you got the time premium and whether it's out of the money and all that, intrinsic value. How do you properly buy options? How do you figure out when you should buy an option and when you should just buy the underlying stock?
Yeah, so that's a great question. And what I like to do is, if there's a little bit more risk involved, I would much rather trade the option. Also, if I'm going to be involved in an earnings date, so basically earnings season starts this week, so I'll lean a little bit more towards the option side, as I could buy some time and weather the storm that way in case the earnings are bad or the market perceives the earnings to be bad. And it takes the stock down or it takes the stock up if I'm looking for it to go down. So around earnings season, I prefer to use options. I don't really care too much about the premium that's built in there. That's usually going to be due to the volatility. And we've seen the premiums for a lot of different equities a little bit higher as of late. But that's the only time I would prefer to. I'm really more of a person that likes to own stocks and sell stocks. But I will use the options market just a little bit more in case there's a little bit more risk involved. What happens when you buy an option, excuse me, is that you're just putting up a small amount of capital for the right to get that option at that price. But what happens is if the price goes up and you own a call option, the option price goes up and you could pocket that difference right there. Rarely do I even ever exercise an option anymore.
Sure.
So I'm really just playing for the premium gained or the premium lost. But in this case, for your question, I always prefer to get into an option if there's a little bit more risk, headwind risk out there a little bit, as opposed to owning the stock.
So we've been talking about the hotel stocks, Hilton, Hyatt, and Marriott. And would you think about options in that case?
Absolutely. Yeah, absolutely. In fact, I'm watching a Hilton option right now. I have not gotten in it because I just felt that the stock needed to base underneath the $70 level. And currently, as we speak, it's at $65.49. But it is forming a pattern that I am looking for to get involved in it. And I probably will do it via a call option.
All right. And are you buying out of the money options or?
So what I like to do is I like to buy stocks a little bit out of the money, not so far. So say the option stock right now, the underlying price is $65.44. I would probably go ahead and buy the $80 strike price because a 15-point move is really not a very difficult move for that stock to make. In fact, that stock, if it gets a bid, could trade probably $90 to $95. So I like to buy them a little bit out of the money. This way, I'm able to buy them a little bit cheaper. You don't have as much of a crowd in there at the time, but once the stock starts to move up into that price, it really gets a lot of open interest, and that premium really jumps.
Interesting. In the money options, are they generally too expensive compared to out of the money? or less
Yeah,
potential for
sure.
gain?
If you're going to buy it in the money or at the money, you're going to pay more than if you were to buy options out of the monies. But I always seem to buy. I mean, rarely do I buy them in the money. I always buy them out of the money by at least a few points, if not, 10 points or so, because the pattern usually tells me where the move is going to go to, and I've done that pretty successfully, over the course of my history.
The average person, as you well know, uh, is like a guaranteed loser when they buy options, the average investor, right?
It's very risky, and if you don't know what you're doing like anything in the market, you can lose money. There's no
Yeah.
doubt about it.
And you lose it real fast, and like you don't even know what happened. But out of the money options, so they could be $50 options, right?
Yeah, sure. I mean, options come in all different sizes and prices, so you just have to look at what your time parameter is. Look at when you think an equity is going to make a move to that level, whether it's a call option or a put option, and that's how you have to view it. A lot of times people will look at the alpha and the beta, the theta, and all of the deltas and the gammas and all the Greek terminology. I
Yeah.
actually just look at the chart. The chart tells everything I need to know, and that's how I go about it.
All right. Well, thanks for that brief primer on buying and trading options. You're thinking the economy is going to reopen sometime in May, maybe in phases. Maybe places like New York, it'll be a little longer, but in places like Texas, we've already got the governor there issuing this week an executive order to which places can open and at timing. But I have a feeling, Nick, once a few places open and people perceive that the risk of the Wuhan virus has passed, that they're all just going to open up. Once that happens, the drive to open up the entire economy, I think people are just going to go for it.
Yeah, I think the same. I don't see right now. We're talking in Florida. They're going to open the schools potentially back in Florida. So that's always a great, encouraging sign. If they start to do that in more places, I think everything just starts to open up again.
Yep, and I think that's what's going to happen because it's so idiotic when you get down to it, the way they've done this. Like, I've been rebuilding my studio because I have all this time, so I've needed cables and mounts and other stuff, and I just go over to Walmart, and it's an essential store because they've got all this food, but you can go buy flat screen TVs, whereas I can't go to Best Buy, I can't go to the Guitar Center, where they have a better selection of all these cables that I need, so I have to go over to Walmart and Target and all these other stores. In Michigan, the governor shut down all these departments of the stores. That's how she's micromanaging this thing. But the whole shutdown order never really made any sense to me.
Yeah, I agree. I see it here. I go to Walmart as well, and it's been packed. Target, I was just there Saturday. It was packed. So it's really just hurting a lot of other retailers out there to have shut down everything. But again, when you get into panics, that's I guess what happens. You
Yeah,
don't think rational.
I think you're right. And I think we need to really do some reflection on this, how individually, as people, we need to do it because you should always have your bug out plan. You should always have your plan for emergencies. We know this in Florida here with hurricanes because every hurricane that happens now that's of any significance automatically is rated at a Category 5 that's going to destroy the entire state. So you have to prepare. And to me, it's just like the pandemic. They're over-promising and under-delivering because they know that if it really does get bad and all these people die because they minimize the threat, it's their jobs and it's their conscience, and that's not a good thing.
Yeah, and it's a great example to use the Florida hurricanes because we deal with it so often every year. But I couldn't agree more.
Yeah, I guess we're gonna have to sit back, see what happens. It's definitely interesting times, but don't sit back for too long. Make sure you go over to Nick's site, inthemoneystocks.com. You can see his trading record verified, special offer there, and a lot of educational materials, which I should probably start taking advantage of more myself. And well, tomorrow, any significant events for tomorrow that you're foreseeing, Nick?
Not yet. As I said, we do have options expiration on Friday, but tomorrow we are coming into the start of earnings season. We're going to have J.P. Morgan report earnings tomorrow morning. I believe Wells Fargo also reports, along with Johnson & Johnson and a few other companies. And then we have really earnings season kicking into full gear as the week goes on. And then next week we get just tons and tons of earnings. How much of the earnings impact will affect the market, I'm really not sure. I don't think the earnings this season, or this quarter are going to be very good. But the market already has that factored in. So we'll see where we go. Today, markets are selling off after that tag of the 50% retrace level, which happened on Friday on the S&P 500. So we'll see what we get this week. But this is going to be a week of a challenging week, as always, because of options expiration, in my opinion.
Oh, for sure. For sure, that always tends to disrupt the market. I've heard that for years and years, and I guess some things never change. But earnings season, yeah, that's a big psychological weight on the market, even though it's already been discounted. But 16.5 million people unemployed temporarily, for the most part, hopefully. The other thing, Nick, is the stimulus checks are starting to hit this week, and the economic injury disaster loans advances are starting to hit. I've heard people getting money there. They've got websites where you can change your address and your bank. They're starting to open up for the IRS, all these things. So, and I believe the payroll protection program payments are going to start sometime this week, probably towards the middle of the month. Middle of the week, rather. They're figuring it out right now as we speak. So all these things are net positives going forward.
Yeah, short term, they're definitely net positives. There's going to be a lot of money hitting the consumer ultimately. So we'll see how that money gets put to work. And, again, there's just been a lot of money printed, a lot of money provided by the central bank, the Federal Reserve. So that's ultimately the liquidity in the system. And that, unlike past years where there was a quantitative easing program, it took a little while for those programs to kick in. These programs have already been injected. So this is immediate stuff, immediate stimulus. And again, that's why you have to look at the market a little bit differently. I know so many people are looking at it like the past and saying, hey, this doesn't happen for 2 months or 3 months. No, This time around, the money has been injected immediately. So, and that's probably why we saw the markets rally up the way they did. But that's why I use charts, because sometimes I'm just not smart enough to figure that stuff out, and I just let the chart patterns tell me what to do.
All right. Hey, it sounds great. Nick, as always, thanks for coming on. And we'll have more tomorrow. Any questions, comments, email me, kl@kerrylutz.com, kl@kerrylutz.com. Nick and I will answer them the next day. All right, Nick, hey, good trading week, and we'll talk to you tomorrow.
Thank you.
This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.